do not buy an investment property in Orange County until you watch this video. Now, you have to set your expectations straight when you go to buy a rental property or buy an investment property, really anywhere right now in 2026. Until you set your expectations properly. When you first go into buying a rental property, your expectation might be to make a lot of monthly cash flow, which would be the total rents is far exceeds your total expenses. So hi, my name is Joey Finrow. I'm a real estate agent in Orange County, California. I not only work with everyday buyers and sellers that buy for their primary or sell their primary home, but I also work with a lot of investors that buy investment properties in Southern Orange County, just in Orange County overall. And sometimes I see newer investors, or it could be like seasoned investors that maybe haven't bought in the last 5 years, where they start the process of going to buying an investment property. They're excited. They're looking to make all this money per month and become rich over the cash flow. And once we sit down, go through the numbers, I'm running numbers multiple times a day for several different clients. Once you see the numbers, it can be a letdown. And in a lot of cases, you're actually losing money per month. And so a lot of newer or sometimes even seasoned investors get a little bit let down by that because in their mind, which is I think is a correct way to analyze this at the beginning, is I'm going to put 20 or 30% down, which is a lot of money here in Orange County, and I'm going to lose money per month on this investment property. And so I would say if you're looking to buy a rental property in Orange County or some sort of investment property in Orange County, I think a couple things that you need to think about and prepare yourself for before you start down this course, because likely you're setting yourself up to fail, unfortunately. In Orange County, if you're buying a long-term rental property, you really need to put down, in order to break even, 35%. This could be a single family home or multiple units. Generally, multiple units is going to get you closer to cash flow if you put 35% down. But likely 35% down on $1 million or $2 million property is going to get you to breaking even. Again, that's not that attractive. In order to actually have some cash flow, you really need to put down 40% or greater in order to have a decent amount of cash flow at the end of the month that you feel like you're earning money per month on. So definitely realize that you're not going to get rich. If you put 20% down, you're likely going to lose thousands or $1,000 or $1,500 a month. But 20% down, at least lose $1,000 a month, up maybe a couple, depending on how big your purchase price is. Now, I would say, again, I'm in real estate, I'm going to be highly biased, but that's okay. Somebody needs to, because likely a lot of people are saying, don't buy. So I have to be the guy that says buy. So the reason why you would want to break even or maybe lose a little bit of money per month is for a couple of reasons. Now, generally in Orange County, people buy investment properties here for appreciation. So you can feel safe that over the long term, the appreciation is going to be one of the highest in America if history tends to repeat itself. So Orange County investment properties are going up in value. So you have that to bank on. Let's just say hypothetically, you're getting 6% of appreciation. So let's say you bought a $2 million property, $2 million fourplex near the beach or somewhere in Orange County. You put $1 million down. You're getting 6% of $2 million, not 6% of $1 million of the cash that you put in. This is one of the differences between real estate and stocks, is that when you get a 10% or 11% or 8% return in the stock market, it's of the money you put in. But in real estate, you're getting, if you get appreciation, you're getting 6% of the total asset value compounding. So then at 2 million, 6%, then it compounds on that new amount after the 6% is rolled in. The second item that I would highly recommend, and I might just leave it here, is the tenants paying off your debt. So you got, in this same example, you buy a $2 million fourplex, you put $1 million down. You leveraged $1 million of a loan. The tenant is paying that loan down for you, which is really cool. That doesn't happen in the stock market, right? But a lot of people tend to forget that's a huge benefit in real estate. Somebody else is paying off my debt for me. To me, that's huge. I like that. I just have to guarantee the risk, guarantee that the bank is going to get their money, get their $1 million back. But in Orange County, this is a strong rental market. I don't like leasing properties, but when I do, I get a ton of applications. It generally leases within a couple weeks, as long as it shows right and it's priced right. It generally leases in a couple weeks. And I have, like I've said, multiple applications to choose from. That's awesome. So if that's the case, I know I'm going to be in a strong rental demand market. Someone's going to rent this. My debt's going to get paid. I'm making a pretty conservative bet on that the debt's going to get paid. And two things happen over time, not in the short term, but over the long term, rents go up over the long term. Also, the asset value goes up. So I have both of those to look at. But in the short term, it's not that attractive because you're either breaking even or losing a little bit of money if you're utilizing financing to buy a rental property. Now, I think people that should take this bet is if you're a high income earner, and let's just say, even if it costs you $1,000 a month, or you know what, let's just say $1,500 a month. Let's say it costs you that to buy this investment property, but you get all the other bonus benefits. I haven't even talked about taxes yet. I won't talk about taxes, but not even including some of the tax incentives with buying rental real estate. $1,500 a month it costs you. Can you afford it? How much is your car payment if you have a car payment, or your car lease? Can you afford a $1,500? I would call it like an investment long-term, knowing that at one day, as rates come down, if you refinance, you potentially can, lower your rate, lower your monthly payment to the debt service. Over time, rents go up. And if you're looking to buy something that is going to go up in value, it will pencil out in the long term. And I tend to think right now, rates are about 7% for a rental property. When rates go down to 5% for an investment property, what do you think that fourplex is that's currently $2 million now at a 7% rate? What do you think it's going to be when it's 4 or 5% interest rate? It's going to be up, in my opinion, it's going to be above that. If you've considered buying a rental property, but you don't necessarily know where to start, leave a comment below. I'm happy to give you some of my templates that I have to run a cash on cash return on an investment. Right now, it could be a good time to buy an investment property because the long-term rental market is a little bit slow because rates are higher right now. Multifamily properties and units have stayed on the market a little bit longer. It's not 2008, okay? So you're not going to get 50% off of the purchase price, but you might be able to get a little bit of a deal. Today, I got one of my investors 2 fourplexes in Orange County, just got our offer accepted. And this is going to turn out to be a really good deal. Seller was a little motivated. And so right now could be a good time to land a deal for the long term. Again, you're not going to make $1 million overnight, but I know you'll be making millions of dollars over tens and so years. Again, if you have any questions on this, leave a comment below and we'll see you in the next video.